Uh, Welcome back to another NQ trade review. Today, in this session, we'll go over how the session developed, focusing on key price levels, particularly around the PPI news release at 8:30 today. So let's just dive straight into the analysis. Okay, so let's start with what are we anticipating for today? Okay, well, we have true day open, which is 12 o'clock at midnight. We have a 4-hour fair value gap right here. Was that the daily fair value gap? Yeah. Okay. What happened during Asia? What happened during London? What happened? Well, Asia hit a key level, right? We hit this new day opening gap, right? But for the most part, Asia did consolidate. What happened? Asia hit the key level. London expanded, closed above, beyond the Asia range, closed up beyond, and hit the opposing key level, right? Which is this 4-hour swing high. So what do we expect, right? Going over this review, I expect London to be the manipulation phase. Right, I expect London to be the manipulation phase, tapping into this key level, and I expect it to, according to market profiles, create the high of day. Right, when London expands after Asia hitting a key level and hits the opposing key level during London, we expect that to create high or low of day. Right, so this is a high of day in this case. So what do we expect New York to do? We expect it to reverse to the downside. Now, got that out of the way. We've got our bias for the day, which is shorts. Okay, so what happened? We have the ATM range high and low right here. I don't want to get rid of these drawings because I just recorded a whole 30-minute video and none of the audio worked properly. So I really don't want to have to draw everything all over again. So you'll just have to bear with me. CRT low, CRT high. Okay. Now, there was 8:30 PPI news today, right? You can see this whole 15-minute candle pretty much created almost the entire range, which priced about 180 points. Yeah, 180 exactly. Okay, let's type on stop 1 minute. Now, the PPI news pushed price above the true day open. What happens above true day open? Price begins to act heavy, begins to push price down. What happens when price is below true day open? There's this invisible force that seems to push price up. Price tends to push up above the true day open if we are bullish, and it makes price heavy above the true day open when we are bearish, pushing prices down. Okay. All right. So today we obviously look at the sell setups. Now, what did I ideally want to see? I wanted to see, well, going into the session, I completely forgot about London creating a high of day. Right, that wasn't on my mind. So I was looking for price to purge these highs, ADM highs, and reverse down because we're bearish, right? But what I didn't keep in mind was if I didn't know London was going to create the high of day, if we were to purge these highs, we would have likely violated that high of day during London, which is London is the most probable to recreate high of day. Total sweeping these highs would have gone probably to the minimum 10 points above, which is way above the high of day created by London. Now, what also happened? Well, I want to mention something. There is one thing that can prevent CRT ranges from being swept. There's something that can prevent CRT highs from being taken and CRT lows from being taken. What's that? SMT, right? SMT can prevent this CRT high from being taken and give us the push down that we need, right? Now, we had a bunch of SMTs at the lows. I was expecting them to at least give us a push to the upside, but eventually be disrespected because we're expecting a reversal all the way down, right? And to at least Asia lows, which we already had, or another key level. Now, or obviously to the CRT low, right? Now, what did we have? We had SMT at these highs. At this point, I'm looking for this to get disrespected. Why? Because I completely forgot that London was high of day created right here, and we would have purged those highs if we were going to take these ADM highs, most likely. So realistically, the valid entry was the turtle soup of this high, forming SMT. ES did not take this high, NQ did. We had the formation of an order block. Why is this an order block? We took liquidity, right? So this long wick candle took this high, but then this little up close candle order block took this high, right? Turtle soup. We had the change in state for this one huge displacement candle, giving us confidence that there's big selling interest here at this point of interest. Big selling pressure. Close below the change in state, we retrace back into the change in state as well as the order block. The last up close candle or the series of up close candles is the change in state. For me, the last up close candle, usually I like to use the order block. Right? We retrace back into that. And the valid entry was right here. I'm trying to keep it really simple because I did really elaborate a lot and it made the video very long last time. But keeping it very mechanical today. We take partials at the midpoint of the range, which is right around here, or this low, right? And you target the CRT low. Okay, let's say you missed an entry. Fine. Re-entry at the order block. Mind you, this is also a proportion block. This candle right here. Why? We closed below. It's the first up close candle that tested the original order block, which was never closed above. We never closed above this candle. We closed below it, forming the proportion block. This proportion block was never violated. All right. But the ideal entry was obviously right here, or the retracement to the order block, which is perfectly respected. Okay. You could have sized in at the change in the state right here, and then entered with your full position at the retracement to the order block. Okay. All right. Now, if you wanted to wait for extra confluence, say another order block to form, I believe you would have missed out on this trade. Yeah, you would have missed out on the trade because this would have been the order block, taking this liquidity, and there was no tap back into it. So this was the best entry right here. Either the retracement straight away or the retracement after. Now what happened? Retrace back into the order block. We said our stop loss above the high. Here. Why above this high? Why not the CRT high? Why not anywhere else? We put our stop loss at the point where our trade idea is invalidated. If we go above this SMT, it violates that SMT, right? So therefore the trade idea is invalidated because there's no SMT to be playing off that would be preventing the CRT high from being swept. The only reason we're entering this trade is because there's an SMT possibly preventing the CRT high from being swept. So we put our stop loss above here because if we go above there, our trade idea is invalidated. And we target the midpoint right there, or the swing low, and the CRT opposing end of the range. Beautiful, beautiful 7-hour trade right here. Beautiful. Look at that. And this is why I never move my stops to break even with the 9 a.m. CRT reversal model. Because our partials would have been hit. We came straight smack bang into break even, retracement to the order block, and I never trailed my stop either. And this happens so often, so often. We retrace back to break even into the order block and we continue down to the opposing end of the range. What was the trade that I did take? It was a pretty stupid trade. I took longs. And I got stopped within like a minute and a half. Now, why did I take longs? We were taking 9 a.m. lows right here, forming SMT. We had a 15-minute CRT form, right? We had a valid order block taking the liquidity right here. We closed above immediately, right? We had a change in the state after we closed above this series of candles. And we retraced back in. Now, why is this incorrect? Well, we were anticipating that New York reversal profile. Right, so why are we taking longs? This is me forecasting price, which you should never do. You take what price gives you. You don't forecast what you think price will do. I'm thinking that price is going to take this high, but I don't know that because what if the SMT was the high that caused the reversal down? And mind you, it's still not on my mind that London likely would create the high of the day. So if we were to take these highs, then we would have likely taken that London high of day, invalidating that rule or that probability. Okay, so I took a $200 loss there. What was I looking for? I was looking for a continuation trade, right? You mark the 15-minute candle that closed below the ADM range, the hourly range, the 15-minute candle that broke the range, measure the midpoint. You want to wait for a retrace to an order block near, at, or slightly above the midpoint, so near or above. I had this order block marked right here. We never got the retrace. We're using this order block. Not this one. This one. Got confused there. Stop loss above here. Invalidates the trade if we go above because we're not respecting this order block. We might respect this one or we might respect this one, which is not really an order block. Even on the 2-minute, that's not an order block. Actually, no, sorry, that is. Most likely. Okay, I would not have taken that as an order block. Now, why is this an order block? We're tapping into liquidity, okay? So, first off, what liquidity are we tapping into? We're tapping into this order block. Why is this an order block? We're tapping into an FEG. We're tapping into liquidity, into the FEG. I mean, it kind of becomes like a propulsion block right here. Okay, right? Because it's the first up close candle which tested that bearish order block, which was never closed above. So I'm waiting for a retracement to there, stop loss above that propulsion block or order block, targeting first standard deviation, which is a -1 of the fib level. Now what happened? We retraced into the changing state. Not necessarily the last up close candle, but we retraced into the series of up close candle before the down move. And so that would have given you a beautiful 3-hour trade. And I could have entered there. I didn't. I could have entered with a little bit of size and the sized more into the retracement of this order block, but I ended up missing out because I got a little bit greedy with that 6R, right? But that ended up playing out. So ultimately, we had the ADM range, we had SMT, which can prevent CRT range highs and CRT range lows from being taken. We had the valid order block, clean displacement below, closure below the change in state right there, retracement, dump, midpoint, partials taken, retrace back into the order block and the change in state in case you missed your entry, and the proportion block. Midpoint, partials, CRT range, hit, right? Perfect. And remember, true day open, being above true day open is ideal for sells. Being below true day open is ideal for buys. So if you want to sell, normally you would prefer to do it above the true day open, which is 12 o'clock midnight opening price. And buys for below 12 o'clock midnight opening price, right? I hope I explained that a bit clearly. This is only my third trade review. Hope you took something from it, remembering the SMT and the CRT highs and CRT lows. Remembering market profiles, London creating a higher day after hitting that opposing key level, which was the swing point, and we saw that reversal down, which New York going into London close also did. Continue. And yeah, I hope you took something away from that proportion, that continuation trade as well. 15-minute candle close below the hourly range, retracement to the midpoint or the change in state near the midpoint or the order block near the midpoint, and we're targeting first standard deviation or any other point of liquidity, right? There's a simple indicator, right? That sort of just helps you with identifying the cycles, the quarters of the day, throughout the sessions. We have this gray area. You can see right here, gray area. This is our accumulation. Okay, right. We have the red area. This is our manipulation. As you can see, manipulated above, right? Perfect. So we have manipulation. We have accumulation, manipulation. Distribution, marked by the green. Perfect. Distribution, look at that. Perfect AMD. Accumulation, manipulation, distribution. It's perfect. All right. All right. So mark that green. Now what's this blue? Blue is the continuation or reversal, right? Or it can also be our accumulation. This is known as our X. So let's just say we ended up reversing. This would be labeled X, as it is our reversal or continuation. We just don't know which one yet. It's a perfect power of three: accumulation, manipulation during London, accumulation during Asia, manipulation London, distribution New York, London close as well. You can see if I enable these: New York, London close, reversal to the downside, and whatever the blue decides to do. And I want to show you guys something as well. Show you guys a little flow chart. Did Asia reach key level? Yes, it reached a new day opening gap. Okay. Did London expand? Yes, clear expansion. Okay. Yes. Did London close below Asia range? Yes. It closed right here, which is above under Asia range. Was opposite key level reached? Yes. The 4-hour swing high? Yes. New York session reversal. And look what happened. Right, so this is how simple it is. Anyway, I hope I explained most of that clearly. I hope you guys have a great rest of your day. Good luck for CPI. Today's CPI day. Hopefully I'll be on the charts, but I'm starting to doubt if I will be. A little bit busy tonight, but yeah, happy trading and good luck.